Hi students. So in this session, we are going to discuss transactions relating to goods. Transactions relating to the goods. So generally in case of goods, good is one of the goods and cash is nothing but those are the sensitive matters relating to any business because number of transactions are incurred in relation to goods as well as in relation to the cash. So owner wants to get the control over the movement of the respected product. So for knowing that movement of the product, so goods related transactions are classified into the four types and based on their movement. Generally, coming to the goods, there are two types of the movements are there. One is goods comes into the business and goods goes out of the business. Goods comes into the business and goods goes out of the business. And when the goods comes into the business, the first one is if the goods purchased, if the goods purchased from the supplier, if the goods are purchased from the supplier and that goods comes into the business, when the goods sold by the business to the customer, when goods sold by the business to the customer, that goods goes out of the business. For example, if the purchased goods are returned by the business to the supplier, so purchased goods returned to the supplier, and if the sold goods are returned by the customer, sold goods returned by the customer. So in this case, the goods came into the business in these two scenario when the goods are purchased from the supplier, if the goods sold to the customer returned by the customer. So in these two cases, the goods comes into the business and when the goods sold to the customer and when the purchased goods returned to the supplier, that goods goes out of the business. And generally, good is a asset and that is a real account. As per the rule of a real account, so what comes in is a debited and what goes out is a credited. What goes out is credited. And based on that, we have to write the journal entry. And remember, as and when the goods purchased, as and when the goods purchased from the supplier, we have to use the word purchases account. We have to use the word purchases account. Remember, purchases account is used only when the goods purchased for resale purpose or when the goods purchased for process of the production of the finished product. And if anything purchased other than for resale purpose, and those are not considered as a purchases. And when the purchased goods sold by the business to the customer, we have to use the word sales account. We have to use the word sales account. So, and when the goods, purchased goods are returned by the business to the supplier, we have to use the word purchase returns account. We have to use the word purchase returns account. And if the goods sold to the customer, returned by the customer, we have to use the word sales returns account. And remember, these purchases, sales, purchase returns, sales returns, and these accounts are used only if the transactions are happened in relation to the goods. If the goods purchased for resale purpose, we use the word purchases account. And if the goods sold to the customer, purchased goods sold to the customer, we have to use the word sales account. And if the purchased goods returned to the supplier, we have to use the word purchase returns account. And if the goods sold to the customer returned by the customer, we have to use the word sales returns account. We have to use the word sales returns account. Then we'll see how to write the journal entries in relation to the goods. First one, purchase of goods for cash, rupees 2 lakh. Purchase of goods for cash, rupees 2 lakh. Here, what is the receiving aspect and what is the giving aspect? And here the receiving aspect is nothing but what? Goods. As we discussed, so when the goods purchased for resale purpose, we have to use the word purchases account. So good is a real account. And what is the rule for real account? What comes in is debited and what goes out is credited. Here goods comes into the business, so that account is debited. And what is the giving aspect? We are here the giving aspect is nothing but what? Cash. Cash is a real account. As per the rule of real account, what comes in is debited and what goes out is credited. Here cash goes out of the business, so that is credited. So here we have to write the journal entry what? So purchases account to debited to cash account. What is the journal entry? Purchases account to debited to cash account. And next one, if the goods purchased Mr. Abhi for rupees 2 lakh. And here, first of all, this transaction is a credit transaction because nowhere they mentioned for cash, only person name was mentioned. So here, what is the receiving aspect and what is the giving aspect? Actually, there is no receiving aspect to the business. Sorry, there is a receiving aspect is nothing but what? Goods. If the goods purchased by the business, we have to use the word purchases account. So goods is a real account. So what is the rule for real account? Debit what comes in, credit what goes out. Here goods comes into the business, so that account is debited. And what is the giving aspect? We are not providing anything. No giving aspect is there, but there is a giver. In the absence of the giving aspect, we have to think about who is the giver. Here the giver is nothing but what? Mr. Abhi. Abhi is a personal account. What is the rule for personal account? Debit the receiver, credit the giver. So Abhi is a giver, so his account is a creditor. His account is credited. So what is the journal entry? So purchases account debited to Mr. Abhi account. What is the journal entry? Purchases account debited to Mr. Abhi account. Okay. Next. So next one. For example, goods purchased from Mr. Bhargav, rupees 5 lakh, and for cash, rupees 2 lakh. And here two transactions involved, two elements are involved. One is purchase of goods from Mr. Bhargav and purchase of goods from Mr. for cash. And you may write separate entry for every activity, or instead of writing separate entry, you may combine the two and considered as a compound entry. So if you write the compound entry, here the receiving aspect first of all is nothing but what? Goods here, either for cash or for credit. So good, when the goods are purchased, we have to use the word purchases account and purchases account. So here good is a real account. So as the goods comes into the business, that account is debited. How much worth of the goods you received? 7 lakh. And what is the giving aspect is there? And here there is a giving aspect is nothing but cash. But the cash you provided only for 2 lakh. But coming to the 5 lakh, there is no giving aspect. Okay, first we analyze for cash. So cash is a real account. And as per real account rule, goes out. What goes out of is credited. But how much amount is there? 2 lakh. But coming to the remaining 5 lakhs, there is no giving aspect. There is a giver. Who is the giver? Mr. Bhargav. So Bhargav is a personal account. What is the rule for personal account? Debit the receiver, credit the giver. So Bhargav is a giver. So his account is credited. How much amount? 5 lakh. So what is the journal entry? So purchases account debited to cash account to Mr. Bhargav account. How much amount? 7 lakh, 2 lakh and 5 lakhs. This is the entry for that one. So goods purchased on credit basis, we write the entry what? Purchases account debited to creditor account. If the goods purchased for cash, we write the entry what? Purchases account debited to cash account. Purchases account debited to cash account. Okay. And next, sale of goods for cash, rupees 2 lakhs, Mr. Gopi. But here, this is a cash transaction. Even though we have the name of the person, but there is a word for cash. If the word for cash is given in the transaction, the name of the person we have to ignore. Name of the person we have to ignore. Then, so if you analyze this one, what is the receiving aspect and what is the giving aspect? Here, the receiving aspect is a nothing but what? Cash. Cash account is a real account. What is the rule for real account? Debit what comes in, credit what goes out. Here cash comes into the business, so that account is a debited. And what is the giving aspect is there? Giving aspect is nothing but goods. But remember, in case of the goods, we have to, if the goods sold by the business, we have to use the word sales account. But good is a real account. Good is a real account. As per the real account rule, what comes in is a debited and what goes out of is a credited. So the journal entry is a nothing but what? Cash account debited to sales account. Cash account debited to sales account. But actually, coming to the nature of these sales, here we are analyzing the transaction from the point of view of the goods. That's why I consider everywhere good is a real account. But coming to the sale, sale of a good is nothing but utilization of the purchased good. Utilized portion of any asset generally considered as an expense and is a nominal account. We have to consider sales account as a nominal account because that is what income for us. Sales is nothing but what it is, an income for us. So utilized portion of a real account or utilized portion of an asset is always a nominal account. Is always a nominal account. Okay. Next, sale of goods to Mr. Gopi, rupees 3 lakhs. Sale of goods to Mr. Gopi, rupees 3 lakh. And what is the receiving aspect and what is the giving aspect? Here, there is no receiving aspect, but there is a receiver. Who is the receiver? Mr. Gopi. So, Mr. Gopi. Gopi is a personal account. What is the rule for personal account? Debit the receiver, credit the giver. Here, the Gopi is a receiver and his account is a debitor. And what is the giving aspect? The giving aspect is nothing but what goods. When the goods are sold by the business, we have to use the word sales account. We have to use the word sales account. So good is a real account. Here, as per the rule of real account, what comes in is a debited, what goes out is credited. Here goods goes out of the business, so that is credited. So we write the journal entry. Mr. Gopi account debited to sales account. Mr. Gopi account debited to sales account. Okay, so this is the transaction. For sale of goods for cash, we write the entry cash account debited to sales account. For sale of goods for credit, we write the entry debtor account debited to sales. Debtor is nothing but Gopi, Bhargav, B, A, B, C. So the person name, debtor account debited to sales account, and that is the journal entry to be recorded. Okay, then next one. So goods purchased from Mr. Bhargav, returned rupees 2 lakh. For example, you purchase the goods from Mr. Bhargav, and after receipt of the goods, you came to know that some defectives are there. Defective goods cannot be returned; those will be returned to the supplier. So, in that case, if the purchased goods are returned to the supplier, then we have to use the word what purchase returns account. We have to use the word purchase returns account. Then what is the receiving aspect and what is the giving aspect? And here, coming to the receiving aspect, there is no receiving aspect, but here there is a receiver. Who received the goods returned? Mr. Bhargav. Mr. Bhargav is a personal account. As per the personal account rule, debit the receiver, credit the giver. Here the Bhargav is a receiver, his account is a debitor. And coming to the giving aspect, here we are returning what goods. So we give the goods. So in case of goods returned to the supplier, we have to use the word purchase returns account. And purchase returns. Here good is a real account. And what is the rule for real account? Debit what comes in, credit what goes out. Here goods goes out of the business, so that account is credited. So we write the journal entry, Mr. Bhargav, account debited to purchase returns account. What is the journal entry? Mr. Bhargav, account debited to purchase returns account. Okay, next. So goods sold to Gopi returned rupees 2 lakh. And here we sell the goods to Gopi. He may identify some defectives in the goods received. So he returned the goods to the business. So the goods sold to the customer returned by the customer. If the goods returned by the customer, we have to use the word sales returns. Sales returns. So here, what is the receiving aspect and what is the giving aspect? Receiving aspect is nothing but what? Goods. If the goods are written by the customer, we have to use the word sales returns account. So good is a real account. As per the rule of real account, debit what comes in, credit what goes out. Here goods comes into the business. So that account is debited. And what is the giving aspect there? There is no giving aspect, but there is a giver. Instead of giving aspect, the giving aspect missed up. Then we have to think about who is the giver. Mr. Gopi is a personal account. And what is the rule for personal account? Debit the receiver, credit the giver. So Gopi is a giver. So his account is credited. So we write the journal entry. Sales returns account debited to Mr. Gopi account. Sales returns account debited to Mr. Gopi account. So these are the transactions involved in relation to the goods. Okay. Then coming to here, summary of the above. Purchase of goods for cash. We write the journal entry what? Purchases account debited to cash account. Purchase of goods for credit. We write the journal entry what? Purchases account debited to creditors account. Next, sale of goods for cash. Sale of goods for cash. We write the journal entry for cash account debited to sales, and sale of goods for credit. We write the journal entry for what? Debtors account debited to sales account. Debtor account debited to sales account. And the next one, purchased goods returned. Who returned the goods? And that goods returned to the supplier. Then we write the journal entry what? Creditors account debited to, sorry, creditors account debited to purchase returns account. And sold goods returned by the customer. Sold goods returned by the customer. Then we write the journal entry what? Sales returns account debited to debtors. And these are the major transactions relating to the goods. For purchase of goods, purchases account debited to cash, and for credit, purchases account debited to creditors account. The sale of goods for cash, cash account debited to sales account, and sale of goods for credit, debtors account debited to sales account, and purchased goods returned to the supplier, creditors account debited to purchase returns account, and sold goods returned by the customer, sales returns account debited to debtors account. And these are the general transactions relating to the goods. And remember these words: purchases account, sales account, purchase returns account, sales returns account. And these four words we have to use if the transaction is relating to the goods. And if the transaction is not relating to the goods, like a plant and machinery purchased, a land and building purchased, or furniture purchased, there don't use the word purchases account. If those are sold, don't use the word sales account. There you have to use the name of the corresponding asset account. If the land and building purchase, then use the word land and building account only. If the land and building sold, use the word land and building account only. Don't use the word their purchases account or sales account. Okay. And next, sometimes you purchase the goods for resale purpose. But in some cases, we use the purchased goods for another purpose other than sale. Another purpose other than sale. So, some special transaction. And these special transactions are relating to what? If purchased goods utilized for any purpose other than sale. And actually, purchased goods, if the goods purchased for resale purpose, then only we have to use the word purchases account. But if the purchased goods utilized for any purpose other than sale, any purpose other than sale means what? If the goods are issued for charity purpose, or if the goods are issued for donation purpose, or if the goods are issued as a free samples, etc. In this way, if the purchased goods utilized for any purpose other than sale, then those goods cannot continued or cannot continued as a purchases, and those transactions cannot be recorded as a sale, because the goods goes out of the business when we are utilizing it. Then in that case, don't use the word sale account, because we are not selling the product, we are utilizing the good for another purpose other than sale. In that case, what is the journal entry to be recorded? We have to write the journal entry what? The purpose account debited to purchases account. The purpose account debited to purchases account. We have to write the journal entry in this way. Okay. Then, for example, purchased goods issued for charity purpose. Here the purpose is nothing but charity. So we write the journal entry, charity account debited to purchases account. What is the journal entry? Charity account debited to purchases account. And next, if the purchased goods issued for donation, issued as a donation, then we write the entry donations account debited to purchases. Here, goods goes out of the business when you are utilizing it. In that case, don't use the word sale, because we are not selling the product, right? We are utilizing the product for another purpose other than sale. When the goods purchased for resale purpose, we consider it as purchases, but we are not utilizing it for resale purpose. So simply reduce purchases. Generally, purchases is having a debit item, debit balance. So we have to reduce it. So that's why we give the credit to the corresponding purchases. Next, purchased goods issued as free samples. Purchased goods issued as free samples. When the goods issued as a free samples, and those are considered as what purpose? Advertisement. So we write the entry advertisement account debited to purchases account. And if the purchased goods withdraw by owner for his personal purpose, If the goods withdraw by owner for his personal purpose, anything withdraw by owner for his personal purpose, we consider it as what? Drawings. So then we write the entry, what? Drawings account debited to purchases account. What is the entry? Drawings account debited to purchases account. And if the purchased goods utilized for construction of building. For example, if the purchased goods utilized in construction of a building, then we write the entry building account debited to purchases. So if you observe, if any goods purchased or utilized for any purpose other than sale, in that case, simply we write the entry purpose account debited to purchases account. We write the entry what? Purpose account debited to purchases account. But here, one of the important point is, in this scenario, if purchased goods utilized for any purpose other than sale, then that transaction should be recorded only at cost to price, but not at the sale price. The transaction should be recorded only at cost to price, not at sale price, because we are not selling the product. Generally, there is a concept called as conservatism. Profits cannot be recognized in the books of account unless it is realized. Without the sale of the product, how can we realize the profit? So he here clearly stated that the goods are utilized for another purpose other than sale. We are not selling the product. That's what it means. The profit is not realized. Unless the profit realized, we cannot recognize it in books of account. So we have to record the transaction only at the cost to price, but not yet sale price. But not at sale price. And these are the transactions relating to the goods. Okay, so if the goods purchased for cash, we write the entry purchases account debited to cash account. If the goods purchased for credit, we write the entry purchases account debited to credit or account. And purchased goods withdrawn by owner for his personal purchased goods returned to the supplier, we write the entry credit or account debited to purchase returns account. And goods sold for cash, we write the entry cash account debited to sales account. And goods sold on credit, we write the entry debtor account debited to sales account. And if the goods sold returned by the customer, we write the entry so sales returns account debited to debtor account. And if any goods utilized for any purpose other than sale, like charity, donation, advertisement, free samples, or withdraw by owner for his personal purpose, or issued to the employees, or for construction of any fixed asset, etc., we have to use the word purpose. Nothing but charity account debited to purchases, or advertisement account debited to purchases, or drawings account debited to purchases, etc. But remember, these all transactions should be recorded only at cost to price, when only if the purchased goods utilized for any purpose other than sale. Okay. I hope you guys understood. Okay. So thank you.